Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, once again, we have had great results in our market forecast from last week. And if you've been following along with the market guys, you'll know that I show the evidence with regard to the accuracy of technical analysis. I show the evidence each week by drawing lines on the chart, and then I leave those lines on the chart so you can see how the market played out relative to those forecasts. And if I zoom in here, I'll explain to you what I drew last week. Now, last Friday was right here. Then we had Monday, Tuesday, Wednesday, Thursday, Friday of this week. Last Friday, I drew this upward line right here, and I said the market would rally just a little bit early in the week, and then I said it would move lower from there to test this support level. And that line that you see here that's running horizontal, that's the support line that I said we would test. And lo and behold, Monday we went up. Look at that, right to my pivot point. You see how it turns right here? Well, on Monday the high was within pennies of that pivot point. On Tuesday we went down, look at that, right again within pennies of this support line right here. And then we bounced, and not only did we bounce, but we gapped up. You know, I could have gone so far as to draw a line on a bounce off of that support, but I didn't want to push it too much. I mean, our accuracy is off the charts good, and I'm trying to show each and every one of you how to do this on your own charts so that you can trade with confidence and use technical analysis more so as a risk management tool. So there's the forecast from last week. Let me erase all these lines and draw what I believe is going to happen next week. As you can see right here, again, this was Friday, Monday, Tuesday, Wednesday, Thursday, and Friday of this week. We have all green candles right here. Friday was here from last week, Monday, Tuesday, Wednesday, Thursday, Friday, all green. And when you have a long stretch of candles like that, all one color, in this case green, we call that a stale green light. That's number one. Number two, we have a gap below the market. And gaps, especially when you're looking at an index, gaps fill 80% of the time. And you can see here the market gapped up on June 19th. And again, 80% of the time that gap will fill. And you can see the days that followed allow the price to come back to that gap fill point before bouncing. So if we went back and looked at all the gaps, here's a gap right here, it filled on this day. Here is a gap down, it filled on this day. So my forecast for next week is that I think we could go just a little bit higher, and the only reason I say we can go a little bit higher and not a lot higher is because today's green candle was fairly long, but we see that on higher volume. So I'm going to draw a line going up right here for early in the week, possibly Monday or Tuesday, but I do believe that we're going to come right back down to fill that gap and maybe even bounce off of this 20-period moving average in the process. So that's my forecast for the diamonds. If we look at the Russell 2000, which obviously is a more broad-based index, it covers 2,000 stocks. You can see that, again, Monday was right here. On this green candle, I said we would move up. We did that by Wednesday, and I said that we would bump our heads up against this resistance. And so we moved up, but then we pulled back in the same day, and even on Thursday, we pulled back towards this 20-period moving average. I can't say it's within pennies, but we did pull back a bit, and then we bounced. So I'm going to erase these lines right now, and I'm going to draw, again, what I think we will see for the Russell 2000. Now keep an eye on this high right here, because we did not break through that high. I do believe that the Russell will try to go back up to test that. So I think, again, early on, like the Dow, the market could very well go up to test that high. And I think that the Russell will also pull back because there's a small gap down here, and you don't see gaps on the Russell 2000 all that much. But when you do, there's a high probability have the chance that the price will move back and fill the gap. And you can see if we look through the history of the Russell 2000, maybe there was a penny gap right here that it filled later on, but there's really not many gaps. So when you see a gap on the Russell 2000 like we see down here, then you have to pay very close attention to that. Okay, so that's the Russell. If we look at the Spyders, which is the S&P 500, interesting how this moved up like I said it would early on. So Monday we went right to the line that I drew right here. You see this diagonal line? I said that would be a resistance point, being right near the moving average. So on Monday we went up again to the penny, hit that line, and then pulled back within pennies of my target. If you are new to the market, guys, then understand that the end of my line is my target price. So right here, the end of that line is 240.77. So that's my target price. On this day, we came down to 240.85. So we were really very close, within pennies again, of hitting that target. So I'm going to erase all of these lines, and because it's the S&P 500 with the gap, I think that because of the higher volume, we could go up just a little bit, but again, I think we're going to pull back in an attempt to fill that gap. So again, like I just said, the end of this line is my target. It might happen on Tuesday, it might happen Wednesday, it might even happen by Friday, but the end of that line is my target. I just want to be very clear about that. Okay, so that's the S&P. Now, if we look at the Qs did not follow along with the rest of the markets. The Qs just stormed up, and I said early on we would go up to test this 20-period moving average area, but it just kept going up in an almost vertical move. Now, what's interesting is that if you apply the rubber band theory to this, and I'm going to give you a link where you can learn more about the rubber band theory, we have the stale green light, we have a gap below the market, but the NASDAQ moved up far and away from that 20-period moving average. So if you look at the distance at where the price is compared to that moving average, you'll notice that in the past, the Qs, here again, the NASDAQ market, does not like to stay that far above or below that moving average. So I think, although we might see a little bit of a rally, I'm not expecting great things for the NASDAQ. I do think that the NASDAQ is also going to pull back. I'll put my target to the gap fill point right here. And you see, again, that long stretch of green volume as well. So that's the Qs. If we look at the Volatility Index, you'll see that we did pull back a bit. Early on, I said that we would pull back. We did that, and we did bounce a little bit. But the Volatility Index came right back down to record lows. This line right here is record lows for the Volatility Index. So whenever you see the Volatility Index at record lows, understand that the VIX is inversely related to the S&P. So this is our support level right here. I think that the VIX is going to go right back up. I think it's going to start to climb, and I think it could go right back up to 13 to test this high right here. So this horizontal line that I'm drawing is the resistance from this high right back here on July 6th. My forecast for the VIX is that we're going to go higher. If you'd like to learn more about what we do at the Market Guys, just go to the Market Guys website, marketguys.com, and click on the video tab right there, and you'll see that that brings you to a library of videos that you can learn from. Here is one I'd like to highlight for you, Trading the Gap. I've mentioned the gap several times in this presentation. I'd also like to have you look at the rubber band effect, which is right here on the right-hand side, second row from the top, so you can get a good understanding of what I'm talking about there with regard to the price as it relates to the moving average. So I want to thank you once again for joining us in this weekly market report. Have a great weekend, and we will speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.